Welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this Wednesday afternoon. I hope you all had a great trading week so far. As always, before we jump into the markets, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Now with that, we can jump into my portfolio. We can see we have a slightly green start into the day. Not sure how happy I'm about that. We'll cover that in a second. Just gonna have a sip and then we can get started. Hi Olga, great to have you here. It was nice to chat in the morning on Discord. Yeah, so it's been a while, actually, a couple of days since you were here the last time, and not much changed in my portfolio other than I'm not sure if you've seen it, that I rolled or changed my GameStop calls against the one that expire in January. They're still at a $30 strike price, and with all the premium, I actually added another 100 shares. Although if we finish above 30, then obviously I get my shares called away, hence why I might not be that happy about the green start into the day. Outside of that, let's actually start with the few things we talked about today. I think one of them, not sure if we talked about CrowdStrike, but there, yeah, like, well, after the earnings, we had a dip. I actually expected to go further down because I just don't see a corrective wave here. I see 5 waves down here, which means that would be part of the correction followed by a further decline. I'll have to check if I have my profit targets written down. One second, just opening the file. And yeah, for the $30 calls, we'll jump, or we talk about that in a second as well. Now, come on, will the file open? Yeah, I was impatient and clicked too fast on open. Log in. Okay, I'm not logged in anymore. Okay, that explains it. Log in, email. Where's my password? There, password manager. There you go. Yeah, so for CrowdStrike, I said I expect them to go further down, and now the file will open, and I should be able to get. Oh no, I didn't. I know I have it written down. I just forgot to sort it alphabetically. So CrowdStrike, I actually expected to go down to 161.30, so to the 61.8 retracement. Yeah, so that basically we now slowly start our ladder down, mostly because I assume that based on the screw up here, they lost a bunch of customers, and while it recovered in quotes nicely so far, I think that that will damage them for quite some time. I might be wrong, but yeah, like the earnings turned out negative or had a negative impact, or at least temporarily. We'll see how they finish the day. Yeah, so, and then we talked about Frontline because I covered it today. There it's like such an, I actually made my video today before the earnings and before this happened, and it's such a nice pattern. Yeah, so if we look here, we have a big 1, 2, and then we're in the third wave, and in the third wave we have super nice wave 1, wave 2, wave 3, as so often terminates at the 261.8 extension. I don't know why that often is the case, but it's just so often. And then from down there, we have at least wave A, wave B, and then wave C, however not finished, where I expect the 38.2 retracement. It's also possible that this is actually going to be a bigger correction. So my targets here are 1614, or where back here, 1614 to 1341, because both of those would be also within the area of wave 4 here of the previous impulse wave, which fit very, very nicely. And yeah, and then very often we touch, wave 4 touches the base channel if we use Kennedy channeling technique. So that would point towards the 50% retracement in this case, which again is still, would actually be perfect on point with the end of wave 4 of the previous impulse wave of a lower degree. I have no idea what they're doing, to be honest. I just today looked at the earnings calendar, and that was one of the few that also has options available. Not that I made a trade, but options market was obviously closed. But yeah, so, but nice pattern. We'll see how it plays out. So far, I'm right on this one. And then we talked about RTX. There, I don't know, visually, we have some kind of impulse up here, which means we're in a corrective pattern. And I mentioned that I believe it will go down further because that doesn't look like a complete, I mean, it could be A, B, and C. It could actually be finished here, yeah. if we throw in expansion. If I would have cash available right now, I probably would buy, because if we look at this, we pretty much reached our minimum target for a corrective pattern. So it could be that we finished here with the overall retracement, and that makes the entry super interesting because we could have our stop loss at 67. And if we're wrong, we're going to be wrong very little. So the risk is, yeah, next to nothing. Whereas if the correction indeed finished here, it would mean that we are going to get the next 5 waves up. So the upside is a couple 100%. Yeah. But again, don't have any, I think I don't have any cash. Yep, I have €1 cash available, so cannot make that play. And then we talked, oh, that's actually all we talked about. Yeah. Another interesting thing, you mean same about RTX? Yeah, the cash not available. Yeah. So, or everything tied up in other positions. Yeah, we talked about that on Discord. Yeah. But again, like right now, I believe it will go down further, but based on that it potentially could be ABC finished here, I consider the possible, or it would be really a nice entry, like next to no risk, because it could have the stop loss here if we use Elliott Wave Theory, and either it turns out that we go up from here, and it would be a huge payoff, probably at least 300% or so, over the next couple of, yeah, like over the next 2 years or so. But yeah, it is what it is. And another thing I looked at today, Bitcoin has been declining a little bit. We see very, very nicely here, we have potentially wave 1, wave 2, and then wave 3 doesn't fully reach the 238.2, but comes close. So I think that this might be 1, 2, 3. We currently get our wave 4, not sure how far, could already be finished. And then we would get our wave 5 down. So again, there could still be room up a little bit and so on, yeah. And then we get our wave 5 down, then we would get ABC or so, and then we get another 5 waves down. So I believe that we would, in Bitcoin, can expect the 85,600 mark at least. Well, short term, there might be a little bit upward move, but then long term, we should see a further retracement into that area before we continue any kind of, yeah, like, or before we see something like a new all-time high. That's something I noticed today. And then let's check XYO. Yeah, there we are long right now. Yeah, like, and our take profit is somewhere here. Let's see. So far, it looks good. Like this would be the corrective pattern finished, and we go up. And Ethereum right now still has a wave to go. So we have a almost perfect correction. Wave A, wave B, and wave C turns around at the 100% mark, although falls a little bit short of the 38.2 retracement. Yeah, not everything's perfect. And then here we visually have the next 1, 2, 1, 2, 3, 4, 5 or so. So for 1, 2, 3, 4, and we should get another push. And that finishes another 5 wave, which basically finishes some wave 1, 2, 3, 4, and 5. And then from there, we get a bigger retracement down. So while there's right now still a little bit more room up, in my opinion, in Ethereum, we should then get around a 20% drop or so to whatever then, or actually potentially a little bit more to whatever then is the next 38.2 retracement at least. And yeah, that brings us to GameStop, to the calls. So in my opinion, I got it a little bit wrong here, to be honest, because that spike down here, if it happens or not, I was not sure if, when I use Kennedy channeling technique, if that spike counts as a breakout, but I now made up my mind to say only if we have candles closing outside, we count it as a breakout. So that's why I mistakenly assumed that here we have our wave 3 finish and are already in wave 4. Now it turns out that I was wrong here, and basically our wave 3 might have, oh, we actually should get a little bit more movement up first, yeah. So because, 1 second, here we have wave 1, 2, or what I believe is wave 1, 2. Let's check the lows, 1 second, 2030, 2037, so that actually goes back there. And we can see that here, we actually turn around nicely at the 561.8 extension, which could mark the end of this upward move, in which case this would be wave 1, wave 2, wave 3, and we might now see wave 4. We would have confirmation once we break the bottom of this channel. And my idea behind the $30 calls was the following. I mean, the premium was choosy. It's the strike price, I got the shares assigned at, so it doesn't kill me if I get the shares called away. Although obviously if we go to 38 or so, I would also, like we talked today, be crying a little bit about missed profits. But even if we go a little bit higher, the next price level would be the 638.2 to 661.8 level, which coincidentally also, where do you come from? So if this is our third wave with then 1, 2, 3, 4, and 5, yeah, then we would get the target area between 30.70 and 33.31 for this wave move to finish. We are already in the target area, but we can see that then at best we might touch the 33.82 in my opinion to finish this third wave if it's not already finished here. And then we anyway should retrace at least 38.2%. I mean 21.4 the minimum, but more likely the 38.2% retracement. Yeah? So as for my options, that the covered calls that expire here, I would actually, so January 17th at 10, yeah, so here, I actually expect that even if we go up here, the options would still not be profitable because the premium that the person that bought the calls from me is higher, so it's around 34 something. So I don't think they would exercise them this week. And if we then get our retracement down, it should take a couple of weeks to play out for wave 4, and then we get our wave 5 up. And then if I timed it right, so I mean the timing factor is obviously a challenge, and I could also be wrong with the entire move here, of course, yeah. But then it would mean that by January 17th, we are slightly below 30, or if then only slightly above. So if I get the shares called away, I would just then sell cash secured puts at 30 strike again, with probably then a decent premium again, because we would be relatively close to that strike price. So while there is a chance that I get the shares called away and I cry about the potentially missed profit, I mean, with 600 shares, it's like every $2 move is $1,200 that I miss out in profit in quotes. I believe that that's the pattern and that it will play out like this. Yeah. So again, might be wrong, but that's what it looks like to me. So that we are missing a fourth wave to basically make this 1, 2, 3, 4. And again, 4 should go at least to 26.98 and or maybe 24.23, and then we get a fifth wave up, which means I actually sold the options quite well. I mean, if I would have sold them a little later, yes, I would have made maybe $1,000 more in premium, but overall we made I got $2,800 for those 6 call options in premium, which means yeah, they pretty much paid for the extra 100 shares, and yeah, so either way, I'm gonna be fine with that. Now you mentioned Lang and Schwarz added 35 and 40 euro knockouts. I have never traded knockouts, but the way I understand it, they are also like binary options. Either that price hits and you get paid, or it misses and you loses what you paid. Am I understanding this correctly? I'm always surprised, and partially, to be fair or to be completely honest, also a little bit intimidated by all the details about instruments, you know, that I have just never heard of, never traded with, or so. Yeah, yeah, that's what I said. Knockouts. Yeah, so you could say if you get those called away, I have high conviction it will go up, because it makes not a lot of sense to exercise $30 shares now. Yeah, that's my opinion as well. So I mean, it would be different if the expiration would be for this Friday. But with the expiration in January, especially if you paid $480 in premium, so you're anyway looking at a break even of 34.80, we would need to be above 35 this week for it to make sense to exercise them. And even then, one could still say, no, I'm not going to exercise them because it's still till January. And however, based on the pattern, I believe in GameStop, I said that we have wave 1, 2, 3 maybe not finished yet. We would need the breakout to the bottom, as mentioned. But even if it's not finished yet, then I don't think it will go much higher than 33.82 or 34.46, which coincidentally would still mean the person that bought the calls from me would still not be fully break even. And then we should get our fourth wave. And if I would get them called away right now, I said I would just write $30 puts, which right now for January expiration would bring $500 per put. So I could sell 5 or 6 of those again. So it would again be $2,500 to $3,000 premium, with which I could actually sell another one again. So actually I could sell 6 or 7 of those then. And yeah, option Okay, so it's exactly the opposite. So if it stays below 35 or 40, you make a profit, but if it touches that price, then they are instantly a complete loss. And what's the time frame of those? So what is like when is in quotes the expiration of the knockouts? Or is it like they increase in value over time and you sell them, and so you just try to sell them before it hits that price or so? Open end, okay. Okay, so I would buy a $35 or euro knockout, and then as time goes by, if the price drops, they increase in value because they became less likely to hit. And if the price goes up, they lose value because it becomes more likely to hit. So if I believe, for example, that if we still have another push to come, that it would only go to 33.82, 34.46, which is dollars, then it would actually make sense to either buy them now or wait for that push and then buy them here, because then they should already be relatively cheap because it's so close to the knockout to happen, or for the knockout to happen. And then if we then indeed were to turn around here in a wave 4, they would then increase in value until we go down here. Yeah. So it's kind of like the same thing as if I buy a put option here or not. Like, those are long knockouts, okay? We'll have to look into that. So again, like, I mean, I heard the phrase and saw it on the German equivalent of Wall Street bets on Reddit a couple of times, but I never bothered to look into like how they exactly work. No, that's what I mean. If you buy them near the strike price, they would be very, very cheap to buy. And then if the price, so it would be, anyway, we are looking at dollars, but the knockouts are in euro as far as understood. So if we, let's assume the knockouts are also in dollar, and I believe we would not reach 35, but at most 34.46. If I would buy them at 34.46, they should be super cheap because of the long upwards move. And then therefore, as then the price bounces, if I'm right, they would then become more and more valuable until, for example, the 38.2 retracement, where I could sell them for then a huge profit. Which means, of course, if I'm wrong and we touch the 35, they are worthless. But it would mean it's like it's basically like a put option, but without an expiration date. If you say some of them are open-ended. Because if I would say I buy a put option at 34.46, like let's say a $30 put option, because I believe it will fall lower, I will also have to guesstimate until when we will fall that far. Whereas if I take a knockout, if it's open-ended, I don't have to worry about the time factor. I mean, and just like with the put option where I can lose the entire premium, I would also lose the entire investment that I paid for that knockout if we touch 45. Although the difference is with the option, if it goes up to 40, I still have my option, and if it then drops, I can still end up in profit. But with the knockout, once it hits the level, they are instantly worthless. So if I have a $35 knockout and it actually touches 35, it's instantly worthless. Kausa usually in quotes my prediction prices. It's Goldman Sachs, Deutsche Bank, Societe who creates those codes. So yeah, that doesn't help me right now. So like I don't see the context of that sentence. They don't do it to give away money. Of course they don't do it to give away money. But I mean, yeah, of course it makes sense. If you write a knockout, then it means you are confident that that price will get touched, and that you can pocket the premium or the fee or whatever that people paid for that knockout. I understand that factor. I'm looking at it from my perspective of, if there's no time factor, then it would be similar. So the one thing that, if you could quickly clarify, with a knockout, if I have a $35 or euro knockout, the moment it touches 35, the knockout becomes worthless. So if it touches 35 or goes to 35.01 and then it drops to 10, I still would have lost my investment because it touched the price. Yeah, am I right on that? Or yeah, okay. So it's in some ways it offers then. So in some ways it's then an alternative to put options, but with the risk that you actually definitely cannot touch the strike price, or not strike price, but the knockout price. because that would instantly be a loss, where with the put option, it wouldn't matter if I buy a put now that expires in January 27 and we first go up to 40, but then we drop, it doesn't matter, I still end up in a profit. Whereas with the knockout, I would lose the money, okay. Yeah, it often does exactly that it touches the price. I mean, obviously they have like institutions working, or not institutions, the institutions have a lot of resources to work out the most likely price levels. Not that I'm going to jump into that, because I'm anyway not really looking to add more brokers and accounts. So I'm quite happy, to be honest, with sticking with Interactive Broker and having Coinbase for the few crypto trades that we're doing on the side, and Computer Share for mostly GameStop. Yeah. So wouldn't want to add another platform just to have something else to like monitor and use and whatever. So especially, Anyway, so for GameStop, that's pretty much my prediction. So while there might still be, as I said, a push further up, I have a little hard time labeling this part. I mean, could be 1, 2, 3, 4, and then 5. I don't think we will go above 34, 46. And then from there, we should get, if we didn't already finish the third wave here, we should then from there get our fourth wave. Which means if I see this correct, then my $30 options with January expiration might actually be perfect, because again, then we would take a couple weeks to make our fourth wave down, and then in January would be likely below 30 when my options expire. And whoever bought them from me is going to be pissed that he missed out on this move. Unless I'm wrong, Sorry, I think we're talking differently. When you buy a co of 10 euro, the price is at 14 and it reaches 10, it's gone. Yeah, but that would be then a short knockout, or not, where you basically say it will stay above 10, which would be like buying a call option. You buy long KO above the current price. So I assume there are two kinds. One where I say it will stay above this price, and the other one where I say it will stay below this price, or not. I mean, you also don't have to explain it right now, everything in the chat, or so I can Google it myself later as well, but never hurts to learn something new. Anyway, while I wait for you to clarify that, we actually are going to move on. So so GameStop prediction quite clear. Obviously, just my opinion, not financial advice, but I think it will play out like this. I might get burned, because even if we go up to 34 and I get my shares potentially called away, we can see that I'm missing out on like, what's that then? Almost, exactly $3,000 in profit. But then on the other hand, I'm literally, so switching to Interactive Broker and leaving the UI-wise quite nice platform eToro, but instrument and fee-wise not so nice platform behind actually was really not a bad idea. And starting to write options also was not a bad idea, because I'm up. So since the middle of May, now open. So since the middle of May, basically up 80%. So as said, before I used Interactive Broker as a data source and had the monthly fees for the data. And then here's where we switch to Interactive Broker. And so the -12 we can actually add here, and that makes it 80% return since the middle of May, which is insane. It's my best result so far. Unfortunately, not a full year. And my long-term history looks a little bit different, because I used Interactive Broker in the past. When I opened the account, before I just decided to use it for as a data source. Here we would then see just the steps down. Although, interestingly enough, well, this looks shocking. If we, now where's the switch here, our value, like that was back then with only, like, as we can see, 2,500 or 3,000 euro, and they actually withdrew it, so, but there was like a losing phase here. But as a percentage, obviously, all time looks like, what the heck? But like the year to date, so since then actively switching again to Interactive Broker and trading here, and starting with around 10,500 or 10,800, So basically, I think I deposited 10,000 and I still at 870 here for yeah, like paying the monthly fees, because you need a minimum balance of 500 euro for the market subscriptions that I only on occasion filled up. Anyway, so like return so far good. So even if we miss out here on a potential, so even if it were to rally further and I get called away, I can live with that because I still have an incredible return. And again, then I can just sell the cash secured puts, which would equal another roughly 25% return over the next 50 days. So yeah, like right now, still around $500 premium. Of course, if we go up, that premium becomes lower. Then it might just be a 10% return for 50 days, which is still good. So yeah, I'm quite fine. Yeah, like I will still complain about missing profits, but yeah, it's not justified. Moving on, Barnes & Noble Educational or Education Inc. I always say educational, but it's Education Inc. Yeah, seems to be going up a little bit. So looks like we are right. Obviously, we don't hold a huge position. I have right now an astonishing 49 shares. But yeah, like looks like we really called this one right, and had the correction finish here at 845 and are now in the next 1, 2, 3, 4, 5 move. Yeah, it's gonna be yeah, I mean, I could still turn out wrong, and this is some ABC move before we crash down further, but I believe that this is actually going to be the next 5-week impulse, and we're going to take our profits at 17.10, which would mark the ideal target for the third wave. Although, considering that we bounce at 161.8, it's already possible that this is 1, 2, 3, 4, and then 5, in which case we might not hit my profit target. But then that would only be the first wave, and then we get wave 2, and then we get a different wave 3. So it just then means that, yeah, we hold the shares longer in profit, and then have to adjust our profit target or take profit to the top, actually. Moving on, Grab, moving up a little bit. Yeah, like we're looking at a weekly chart. Nothing changed since I think last Friday we talked about it further, so we're going to skip that. Immersion, what are you doing? Still moving sideways here. So again, weekly chart. So again, it's going to take time to either be proven right, then we go up from here, or be proven wrong and we retrace a little bit further. Costs still unchanged as well. We're still waiting for the break of this top here at 879 or the bottom here at 652 to confirm either correction over and we're going up, or correction not finished and we are going probably to 61.8 retracement. NEO, we are out of, no, we are not out of NEO. We entered here under the assumption that this might be the end of the correction. Looks like I'm wrong with this one. However, I also pointed out that visually it looks like there might still be a fifth wave move, which appears to be happening right now, which means we would expect to go below 428, anywhere between 428 and 393. However, this would makes this, what high would we have here, 417, 411, 417. So if we break 417, then that whole thing would need to become a diagonal, which means then either I made a mistake with the labeling and this is an entire 5 waves instead of 1, 2, 3, 4, or what's the alternative? I don't think there's much of an alternative. Yeah. So yeah, so I believe we might terminate here between 428 and 417 or 418 actually. Which then, yeah, after that, we should then see our upwards movement if I'm not completely wrong, yeah. I would get out of here. I mean, we only have 100 shares in NEO. I would get out of here if we break the low at 363. So then my pattern becomes completely invalid and I'm going to get out. But other than that, this looks quite okay. So while I obviously would have loved if we keep going up from here already, but it looks also fine with the break here. Especially since we have the 78.6 retracement at 432, and we technically, we actually touched it here already, yeah. So, but here we will probably spike a little bit through, and then from there might get to see our turnaround and go further up. Oh, I'm wrong, and we'll have a small losing trade where we'll lose around what, $80 or so, or $90, so that's okay. Novavax, yeah, seems to be going up further, but question will be if it will do so fast enough for my options. So to at least close them with a smaller loss instead of, yeah, like will not be a profit. As mentioned, only if we break 1074 would I consider increasing that position if I have available funds for that. And yeah, with that, we actually have most of the things covered. Now, I don't have SPY labeled or the Nasdaq labeled or any of the other things. We usually, Amazon, I think we have labeled. Yeah, but there, I covered it yesterday, so I'm not going to repeat that. You can check out yesterday's episode. And then for the rest, let's close those things for a minute again. For the rest, it basically is just to see what's going on. So, I mean, by now, markets are obviously open for 25 minutes or 24 minutes already. We'll see if CrowdStrike drops further, but I really expect this to be some A, B, C pattern, and I would expect to hit the 160, 130 level here. Yeah, I might be wrong, but that's just what it looks like to me. So obviously, since we're on a 3-day chart here, we again would expect it to drag out. So we're talking here about till June or August next year. Yeah, if I'm wrong, I mean, it doesn't matter. I don't have a horse in the race right now. Yeah, we don't have any extra funds. I mean, I could obviously use the margin and excess liquidity to make some trades, but I don't want to do that. So yeah, so we'll just get to watch, and I'll get to regret not making a trade on margin if I'm right, or I get to be happy to not make a trade if I'm wrong. And outside of that, I think there is not much to cover. Yeah, so RTX, yeah, like still above. Oh no, now it already hit 68. Yeah, so no, and the low here 67. Okay, so yeah, so that would still be a live trade. If I would want to gamble and would have extra cash, that would be the gamble that I would make right now. Yeah, so just so little risk and so much potential reward. Although the pattern looks like this is a 3-wave move, which means this is going to be 1, 2, 3, 4, 5. So based on the pattern, I expect it will go further. But yeah, like based on the levels that we have here, it would be risk-reward ratio just too good to miss out on. Yeah, and DJT, there we are bullish. Although it's completely overvalued, but yeah, do we get a chart? Doesn't look like we get one. NVIDIA, there we don't have the labeling on the chart, so also doesn't matter. Visually, looks like we're retracing this. So might go down to 118, roughly. Actually, 38.2 makes more sense because that might be area of wave 4 of the previous impulse wave, so 130. Where we're already very close, but yeah, like we lack the overall labeling right now because I mistakenly deleted all of that. So yeah, no serious opinion until we have the time, or until I make the time to actually label this again. And I think with that we can actually call it a day. What is Intel doing today? Retracing a little bit, yeah, what we expect. So on the rough labeling here, we have a little bit of an issue because we were right here, but everything happened in one candle. So first hitting our low target, then hitting our high target or minimum target, and which makes this, yeah, like to enjoy with a grain of salt. Actually, there should be more downside. How high did you actually? Might have to look like this. So 1, 2, 3, 4, 5, A, B, C, 1, 2, 3, 4, and 5. Still, yeah, points to the 61.8 retracement, 2277. Yeah. Yeah, my pleasure. So, but as said, like based on the pattern, I think that with the naked eye, it looks like just this part here. 3 waves up, which would be a corrective move, which means then 5 waves down, and there it looks 1, 2, 3, maybe not even finished, 4, 5, and but still, it would be an interesting entry. I mean, yeah, but no extra funds, so no entry here. And other than that, yeah, I'll probably just keep watching GameStop for a little bit today to watch the potentially missed profit on the upside here. Honestly, I'm there. That's one of the things where I'm a little bit torn. Like, it obviously doesn't matter if I get my shares called away. The whole purpose of the trading in Interactive Broker is not to be tied to GameStop forever, no matter how high it goes. We talked today about opportunity cost, which was something that annoyed me along the way. Having a bunch of shares and seeing them moving sideways or downwards and so on. And even if I believe long term it will explode, in the meantime, not being able to use that money in any other way. And especially in the interactive broker account here, I mean, the whole purpose why I have it was the idea that I can actually, in quotes, trade the real to some extent. So make money from writing options and not necessarily make money from having my trades being right. And it's, so I shouldn't be bothered at all about the shares being called away. I should actually be happy because it would free up all my cash. And as said, if I wanted to, I could then sell the, as said, $30 puts or maybe another put. Wouldn't go much above 30 depending on how the pattern looks, but and if I can sell 5 of those, it would bring me $3,000 cash that I can use to make some other trades, either buy shares in other stocks, or like increase the Barnes & Noble position to something reasonable, maybe increase or average down on a NEO position at the next target area. Average down on costs, which is besides GameStop with $1,000 investment, the biggest position in the portfolio right now, and so on. So there would be so many ways to actually benefit from the shares being called away, because it would mean it frees up the cash instantly instead of waiting till January 17th. So, but on the other hand, still 600 shares, if it really starts to rally now, it still might make a 4-digit difference in results. So but I mean, I see the pattern looks to me to be like that. And we'll just have to wait and see if we'll get this last push up into that area, or if it goes further and I'm proven wrong. And then if we get then our fourth wave, unless my labeling is completely wrong, then I just have to hope that my shares don't get called away, in quotes. Or I don't have to hope. Actually, I would hope that we rally a little bit, I get them called away, and then we start wave 4 and I can sell the $30 strike puts. Or even lower, so wait for it to lower further, to sell the, I don't know, $25 strikes then here or so, puts. You sound like my internal voice saying the same, just get rid of some and deploy elsewhere, but I cannot get rid of some, because if I would want to get rid of some, then I would need to actually close out the calls, and they currently have an $800 loss, so I would have to pay $800 more to close them out, of course, or $100 something to close one of them out. Which basically means actually giving back 600, the 480 that I received plus the paying the 120. Technically I could do that, but in the first glance it would only actually remove money. So if I close one of those calls, I get it minus 600 cash, but I could then sell 100 shares or whatever amount of shares I want to. And I think it makes more sense to have the patience here. And if they get called away, even if I will complain a little bit about it, at the end of the day, it would actually free me up to potentially sell puts at a lower strike if we then get the correction, or sell them at the same strike and pocket premium again, and then use that premium in some other positions. I feel a little bit pity, when I see things like today in the morning, I look at this pattern and I see, okay, there should be another drop. I mean, I could have also been wrong, but that's just how it is. Nobody is always right. And then within a few hours, because they announced before market open their results, it actually happens. So I mean, of course I couldn't have gotten any options during the time. I would have to actually go short, which carries quite some risk if I'm wrong, blah blah blah, and so on. So I probably anyway wouldn't have traded it, but I know that my prediction was right. Why is my portfolio not growing? That's like one of the biggest issues that I have. So I feel like I'm right often enough, maybe not always, or maybe not 100% right, but right enough that the position would already go into profit. Even with NEO, for example, where again, in my opinion, this could have been the end of the correction, and we entered here. If I would have entered bigger or whatever, would have, could have, blah, 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 but the position would have already been at a profit. So adding a trailing stop loss or the stop loss to secure a small profit would have already been enough to actually, even if I would only be partially right, to secure a profit and grow the portfolio. And so it's frustrating whenever I look at something and I see a pattern and then I don't trade it, and then it plays out exactly or close enough to what I thought it would do. But I think there's the difference. You have people that just trade, so they make some trades and maybe only share their winners. Then you have the next level. That's kind of like you share what you believe will happen, because it also takes, I don't know, maybe not courage, but you have to be willing to put yourself out there and risk being wrong, and being wrong is never nice. So to even share your predictions, so to point out, okay, to me it looks like this. And then obviously the next level is to put your money where your mouth is. So if I see a pattern, obviously if I say, okay, I believe the earnings will be negative and it should drop further to at least the 16.14, blah, 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 yeah, well, that's good and well, but if I'm wrong, I don't lose anything if I don't have a position. So it's kind of like I might lose, in quotes, my reputation if I'm wrong all the time, yeah, and then there would be an inverse Christian Rauchenwald instead of an inverse Jim Cramer. But other than that, yeah, like, so I mean, we talked about it today, yeah. So you anyway feel the same, that like it feels like you see it, but either for me it's then sometimes either I'm just too, do I really want to risk money on a stock that I looked at 2 minutes because I never looked at Frontline before. I have no idea what they're doing. I just looked at the pattern and that was the conclusion based on the pattern. So do I really want to risk money, or I don't have money available? So even if the pattern looks super tempting, yeah, shit out of luck. If I don't close other positions that I'm tied up in right now, then cannot make that play. Yeah, and then like anyway, I'm gonna call it a day here. So Olga, thanks for stopping by. All the lurkers, also thanks for stopping by. Tomorrow markets are closed, so there's not gonna be so US markets are closed, so there's not gonna be a stream. I wish everyone in the US a happy Thanksgiving. On Friday, markets are going to open but close early. So on Friday, we still will have a short stream unless something comes in between. Hence, don't forget to like, subscribe, enable notifications so you actually get notified when I go live, so you don't miss out on those streams. And yeah, with that, I wish you all a pleasant rest of the day and a pleasant trading week, and then see you all on potentially on Friday. Till then, bye-bye.